Welcome to Oregon Cash Flow Pro. My name is James Barber. We're back with a weekly recap of our challenge, our 0% credit card interest challenge. My hope is that I'm exposing you to some different ideas, ways that we can make money using other people's money. In this case, we're using a credit card company's money. But in some cases, it might be you can get a loan at a very low interest rate from your life insurance policy. You might be able to get a loan or borrow money from a HELOC, some other line of credit. There could be different ways that we can access some cash and arbitrage that money into putting more money into your pocket, creating some extra cash flow for you. That's my hope here. And in addition to giving you some ideas on where we can get money for things like this, what can we do with it? What are some things that we can do with it that don't take a whole lot of time and we can add it into the rest of what is likely already a busy schedule? So I'm trying to expose you to some different trade ideas. We're doing a number of different things inside of this challenge to generate income. However, these videos have not been very popular. We don't get a whole lot of views or interactions. And so I want to hear from you. If you're watching this, if you're getting value from this, please leave me a comment. Let me know what part of this is interesting to you, what you want to see more of. Otherwise, I'm probably going to drop this back from a weekly recap. Maybe we'll just recap it once a month. Maybe less than that. We'll see how the popularity goes because we all have a limited amount of time. And I got to make sure I'm focused on what you guys are interested in seeing that can help you out. Because I could do this on my own in the background. I'm creating another stream of income, potentially multiple streams of income with where we're going to end up with this, if we're successful, of course. And I'm going to keep doing that regardless of whether I make videos about it. But it does take me time to do videos and edit them. And that takes time away from me doing other content that you might be more interested in. So please, let me know if you're getting value from this. It does help me determine what I'm going to be creating each week or the next week. Are people utilizing the spreadsheets? Do I need to take the time to update the spreadsheets? All of these things are important for me as a content creator so that I know I'm providing the most value for you. So hit that like button, subscribe if you're following along on this, and be sure to leave a comment and let me know that I'm on the right track or if there's something that I'm missing, because I might be glossing over the most interesting part of this or something that I'm not digging into that you need more information on that will be helpful. Feedback is very important. So please leave your feedback. It is much appreciated and wanted. Now, you can see the title for this week, Completing the Wheel Strategy. We decided we were going to mostly rely on a modified wheel strategy. We did get assigned on Webull in that first week. We also got assigned. We didn't actually get assigned, but on NVIDIA. And we completed NVIDIA last week where we closed out that position to complete the wheel. And this week, we got to complete the wheel with Webull. Let's hop over to the spreadsheet. I started this week to pull in this information from tastytrade right from the account. And this is what you would normally see right here when we get into tastytrade. And so I wanted to be able to show you on the spreadsheet where we can just keep track of it, because otherwise you have to wait until I do an updated video to be able to see this screen. So I'm trying to keep this part updated as well here on the spreadsheet so that those of you in the Discord that have access to the spreadsheet can keep up with this if you're interested. Now, to get access to the spreadsheet where we're tracking all of our raw trades, you get all of the information from every trade that I did here, all the information you need in order to see what I actually did. It's in this spreadsheet, and we're just tracking our totals here. Our Discord members have access to that, and you can become a Discord member by joining as a channel member here on YouTube or via Patreon, and it's just $1. I keep it at a very low cost because I'm not trying to make money on this. I'm not trying to sell you something on this. I'm just trying to provide you education, but essentially it keeps the trolls out of the Discord and gives me a little bit of an incentive to continue creating these things because they do take quite a bit of time. And when I say a little bit of incentive, we're talking very, very little. I mean, I don't really make anything on the Discord membership. That's not the goal of this channel. Essentially, the money I make from YouTube and from the Discord is just a tiny, tiny amount. It is not very much in general, but it does help me to gauge the interest on all of this stuff and if it's worthwhile. Now, here's where we're tracking kind of all of our totals for each particular ticker, because we kind of want to see which ones are we having the most success with. This is where I find value in this page. You can see Triple Q, we're in the positive. NVIDIA, we're in the positive. And this one was the one where we completed the wheel right here. We essentially got assigned, we ended up buying a long call, and then we ended up getting out of the long call and completing that. And then we ended up closing a iron condor. Coinbase in the positive. mstr, ooh, this one's our biggest position right now. We essentially got assigned on mstr this week. Last week, I thought mstr was going to keep going up. And so we added essentially some long poor man's covered calls, modified poor man's covered calls. And then this week, it went down quite a bit, and we essentially got assigned on one of our put spreads. And so we added another call. We added another long call. So this is going to be a good position when mstr takes off again on the way up. I'm okay getting into this position. We've got like 4 months on these long calls for mstr to turn around and head back up. And when Bitcoin makes its inevitable turnaround, we're going to be able to profit off of this overall position. Now, we're not actually negative 8,000 on this, but we are down a bit in unrealized gains. Our long positions are down almost $2,000. Our realized gains, only a tiny bit here on mstr because of that and some of the rollings that we did. But our actual positions here with mstr, you can see we have a net liquidity of $6,000. So we are in the negative a bit in our long positions. That is not unexpected. When we get into a poor man's covered call, we're doing it for weekly income, and hopefully we're going to see some positive growth in the underlying stock that allows us to make money on the long positions over the course of however long the amount of time is that we bought. In this case, we're going out to January. We went out to January on this one. We're also out to January on these two. We're just going to keep selling against these. We're going to make sure, the goal is to make sure that we're earning time value. In this case, we're making about $30 a day in time value with each of our mstr positions. Well, if we have 110 days and we make $30 a day, that's over $3,000 that we're going to recover. Presumably, our long positions will still have value as well when we get to that point. Now, we're going to look to exit before that point, and if we need to, we'll open up other positions. But we're going to continue to earn income each week with some type of strategies. We're going to get more aggressive selling call spreads because we want mstr to go up. If mstr goes up, we make money on our long calls. We make back what they lost. And if it doesn't go up, we're going to keep the premium from the spreads that we're selling. So we're going to go well out of the money so we don't get into trouble. We're not going to go too close to the actual strike price of mstr, because if it shoots up really quickly, suddenly those spreads that we sold are going to end up offsetting the gains that we're going to make on these long ones. So we got to be careful about that. In this situation, we're going to be well outside the money, and we're going to have some positions set up that we will close the spreads once we end up in a profitable position, where we're getting the type of profit that we're looking to get with the type of money that we're putting out here. So that's the idea there with mstr. Back to the spreadsheet. Webull, we have not updated this yet with the assignments that went through. I got to update that. All right, we're fully updated with the exercise and assignments of our long calls. Here's what happens with some of these long calls. When we don't own the actual shares, it becomes hard to close at the end of a day because of the bid-ask spread. Essentially, whoever's dealing with those options is hoping that you're going to close it out for a midpoint in there and essentially give up money. Well, we would have given up probably close to like $30 or $50 or maybe even $100 if I had closed these out wherever it was trying to get me to close these out for. Because the deeper in the money you get at expiration, the bigger they make this bid-ask spread. It's crazy. So essentially, I have to let it just expire for the day and then let the brokerage handle the exercise and the assignment. Not really a big deal, but that is the way to optimize what you're getting. I usually will put in a sell order that will give them $1 if they just close it out without having to do the whole assignment and everything. Sometimes they don't close it. Sometimes they do, but they'll do it right after the market closes. And essentially, they would probably rather just take that dollar as opposed to going through the assignments. So this is what that looks like, where we get the assignments and we get our credits. Now, there's one other thing in here, and this is kind of exciting. Our money transfer finally went through. The approval is there. And starting next week, this went from our $34,000 challenge to a $59,500 challenge. We're just going to call it $60,000 challenge and make it easy. So we now have all of the money moved for this challenge. Things are going to start to get interesting here because we're going to get more aggressive. Now, we started to get more aggressive this last week, but really what we want to see is we want to start taking advantage of the down moves in the market. If we're going to be successful in paying all of this off, meaning we don't just cover the fees to do these transfers, but we pay off all of the cards over the next year, we need to start increasing what we're making. Well, right now, that 25,000 going in here makes it look like we're positive. I'm going to delete that from the raw trades. This doesn't do us any good. That wasn't to trade. All right, so we take that out. This is our actual position. Now, our value in the account, our net liquidity is 14,800. So when we see minus 15.5, that means we're only down $700. You can see we have a lot of positive positions, and we actually picked up some shares of high yield dividend ETFs that are going to help us. I'm going to explain that here in just a few minutes. We entered another position that required some longs, and then of course these two have some longs. So we're not necessarily negative on these. And when we go to the year to date, it helps us to kind of understand what we're looking at. Here on Tesla, we have 654 in realized profit, and our current position is profitable. So if we were to clear it out, this is our profit year to date, and then this is our profit year to date after fees. So Tesla is actually a really good position for us, even though it shows up negative right here. mstr is the only one that's truly negative. Microsoft, we haven't closed anything. This position is actually positive at the moment if we were to close it out. But we put out a decent amount of money to try to make some income on this thing. And I'm going to talk about that trade because this one is going to be a little bit unique compared to everything you've seen me do so far in the first 3 weeks. Hood, we end up doing really well on Hood. We still have some outstanding positions, but realized profits on Hood, 257. We still have 52 here if we were to close everything out. So currently up almost $300 after fees on Hood. The reason we see 700 here is because we have some puts that are sold, some cash secured puts that are sold for a number of days out that we got a significant credit for. So eventually, as long as Hood stays up above like $80, we're going to realize all of this. If we don't close it out early, we may close it out early. It depends on what we end up deciding if we need more collateral for something else. But one of the things that I'm doing here, besides building up some of these high dividend ETFs that are going to kick out income, we want to start accumulating some short positions that are not home runs. They're just base hits. That's what I've used some of these Hood trades as. So Hood, you can see we've got 26 days to expiration on these two spreads and 229 days. Well, this is our theta column, time value. This one is worth $3 a day. That's what we're going to make if we just continue to let that go for 229 days. That's pretty good. And then this one is also $3 a day for the next 26 days, assuming it ends up expiring worthless. Now, if Hood ends up going up, we could realize some of that quicker. We may decide to get out of it, give Hood a chance to come back down, and then we enter this position again. But we locked in some profits during that up and down part. Those things are all on the table in these positions. But since our goals here require us to make almost $8 a day in order to just pay off the fees over the next year, or $170 a day if we pay everything off. We need to stack up that time value the best that we can with as little capital required as possible so that we can start to meet these goals. And that's what we view these positions as. $3 in total. I'm getting $6 a day. With all of our positions, we're at $98 a day. We're halfway to our goal of 170 that would completely pay off these cards. Now, that's in a perfect world where the market just stays steady. The reality is those numbers are going to go up and down, and it's going to require us to enter into more positions so that we maintain and increase where we're at. As these get closer to expiration, this number goes up. If I continue to enter more trades that are farther from expiration, this number will go up. If I trade the short-dated expirations for the long-dated, this number is going to go down. So this is not a static number, and we can't just assume that this is going to be the profit, but it's something that we watch in order to manage our overall positions and make sure that we're moving in the right direction, which is let time value work for us. That's the value of being an option seller as opposed to an option buyer. Okay, I think that tells us about everything we need to know here on this particular sheet. Let's hop into the actual trades that we did this week, some of the positions that we had to manage, and what did we enter for next week. Let's start with Webull. Webull, we ended up selling a put at $11. The last time we got into Webull, we sold the put at $14. We ended up getting assigned, we bought the shares, and Webull dropped all the way down to like $12.50. We started out selling calls at the 14 level. We ended up bringing those down to the 13.5 and the 13 because I opened up a couple more long positions, knowing that the position it put us in was really good if we ended up with a rebound there. And this is not a very expensive stock, so we didn't mind owning more of it. Well, we went out 12 days on this one. We're getting almost $2 a day in time value. Overall, it's not a whole lot of money. We got $21 for putting this on. We're already $8 in the positive, but we're just going to let this play out because if Webull decides to come back down, it went all the way up to 15. If it decides to come back down to 11, we'll gladly pick it up, enter the wheel again. Otherwise, we may just let that bleed out, but we also might sell some more puts above this number for this week. We're going to wait and see. If Webull dips down, we're going to look to sell some more puts on the dip. I didn't really want to hop in and sell a bunch of puts when it was spiked way up this last week on Friday. In general, we want to sell our cash secured puts on a down day, on a red day, because it's possible that it might rebound the next day or even shortly after we buy it and put us in a profitable position right away. We can close out of these positions the next day for 50% profit. You're talking about a massive annualized return on some of these trades. Now, the collateral that this required was $250, and we got $21 for it. That's a 10% return almost in 2 weeks. That's equivalent of 260% return annualized. These are the types of trades that are great because it's not likely Webull's going to come down that far in 2 weeks. And if it does, that's a way better position than we were just in last week, where we were in for $14, $13, something like that. So there's Webull. Let's look at blocks and COYY. We actually own shares. These are the high yield dividend ETFs. We created a spreadsheet for these. We're going to be tracking these here because I expect to own these when we're done with this challenge. Whatever we pick up for high yield dividend ETFs, we're going to utilize the dividends that they kick off to make our monthly minimum credit card payments and hopefully stack up what we need to pay those cards off at the end of this year. Now, there's 2 positions that I'm going to be in where we're going to store our cash that we're going to use to pay off those cards. One is the high yield dividend ETFs, and 2 is those long cash secured put options that have almost no chance of getting in the money. Both of these give us use of capital that I'm not otherwise utilizing, and it puts us in a position that it's not likely to lose value very quickly. Now, one thing I like about these high yield dividend ETFs is they're basically doing the same things the same things that we're doing in here, except on a much bigger scale. And where we started this challenge and we slowly ramped up because of where we were at in the market, we're like at a high point in the market. And we want to make sure we have cash when the market dips, because that's where we're going to really be able to take advantage of a pullback and then a rebound. But what these provide is the ability to deploy a large percentage of our capital without having to spend so much time managing positions. They're going to do it for us. So I'm essentially outsourcing almost $4,000, or right at $4,000. We're outsourcing this to the professionals. They're getting a cut for that. And they're not going to be able to be as aggressive as I am in what we're trying to sell. So they're not going to be able to return most likely 100% over the course of the next year in order to pay back those cards. So it's not like I could just take all of our money and in week one, dump it into COYY and assume that I'm going to get all that money back in 8 weeks or in 8 months. That's too risky of a position to go all in on that. Had I split up the money, that's a safer position. We would have been profitable pretty quickly because Blocks was doing very well right out of the gate. But again, it's a concentrated position that won't necessarily help us to meet our goals, especially if there was a massive downturn that happened in the market. We wouldn't be able to control what's happening with these. So we couldn't just take this challenge and put everything into that because we have a specific payback window. Different story if I'm borrowing from my life insurance where I'm paying 5% interest, but I don't have to make a payment. There's no minimum payment. All I have to pay for the whole year is the interest payment, and I can let that loan continue forever. That is a much safer loan type for being able to just borrow from that, dump into these. And we're going to be starting a new challenge with that too. In fact, with this same type of blend, I've got $10,000 that we're going to be borrowing from one of our policies and putting in the paperwork this next week to get that money moved. And we're going to open a new challenge similar to what we're doing with QDTE. And we're going to most likely split it between these two, Blocks and COYY. I think this is a good balance for getting really good income to pay back that loan fairly quickly and potentially protect that NAV value and get the increase on the underlying. So I'm kind of excited for that one. Let me know if you're excited for that. Let me know in the comments section if you're looking forward to that one. So I'm excited to add those. Let's take a look at Hood. Oh, we just looked at Hood. These are our current positions. We're getting about $6 a day. Lulu bounced back a bit. We're not quite in the positive on our overall positions, but we're getting closer. Remember, we entered a couple of cash secured puts right before earnings on Lulu the first week, and immediately it went negative. And these were negative. We had 2 of them. They were negative like $500 or $600. Well, we still have 110 days on these. We had a long time. Lulu was in the 160s. Now it's back up to 176. But when we expected it to bounce up, I sold a ratio spread, which was we bought a call at 135 and we sold 2 of the 125s. It put us in a better position on this part, but it did give us a position that would lose money here. Overall, for that spread, we got a credit. But if Lulu were to continue dropping down, we have the potential to make $1,000 between one of these and one of these. So it was kind of our hedge against Lulu continuing to drop down. If we knew where Lulu was going to go, which I didn't know where it was going to go, we don't know if it's going to go up or down. So we're trying to manage for both positions. You're not going to get optimized gains when you try to play both directions. But our goal is to just make a little bit, accounting for movement either way. And that's what we basically did here. So going to take us a little bit longer to recover, but our time value is $10 a day, almost $11 a day for the next 110 days. So as long as Lulu doesn't get to 125, we make money. We'll make the most money if it gets right to 125 because we'll make 1,000 on this spread and then these expire worthless. So there's the opportunity to make more money, but realistically, we're going to be pretty happy. We're going to make $553. That was our overall credit for these positions with essentially 120 days till expiration when we first got into these. Base hits, folks, base hits. Microsoft, this was the interesting one that we opened up. this week. Now, notice these are puts. This is not a poor man's covered call. It's more like a poor man's covered leap. Let's take a look at the positions. We decided to open a long put at the $500 strike. Cost was a little less than $3,200. You can see it's a 0.42 delta. That means if Microsoft goes down, we're going to gain $42 in value for every dollar Microsoft drops. Well, Microsoft might not drop. They're in big on the AI play. They just came out with some other thing that helps chips cool. It's like, there's a good chance Microsoft ain't going to go down. Rather than doing what we might normally do, or a leaps, which is you buy deep in the money. If I was sure Microsoft was going to go down, we would buy deep in the money and we would have a much higher delta, 0.8 delta. If Microsoft goes down, we would gain $81 if we were to buy a long put, but we would also lose $81 if Microsoft goes up. And there's a good chance Microsoft could go up. So how do we take advantage of a potential dip without risking quite so much? Well, instead of putting out 8,000, I put out 3,000, a little over, well, it's probably around $3,200, but we're limiting our movement to half of that. We're only going to lose $42 if it moves that way. And our time value, our theta, is $6.88 because we went out 263 days. What are we getting from our position here? We ended up doing a ratio spread. We sold a put at the same level as our long. That's our calendar spread. This put gets us $28 a day in time value. It loses $28 a day in time value. Our long only goes down by, what was it, $6 or so? Then what we did, if I only put in the calendar spread, if I only did that, if Microsoft moves up, we would have to close out of it right there. We would get essentially $144 or approximately that. We're selling this and it limits what we can make on the downside. Well, what I calculated on this position, we have 263 days. That's 37 weeks until expiration. How much do we need to make for this to be profitable? How much do we need to make each week? About $100. We make $100 a week. Every one of those weeks, we would make basically $500. It's not a great return on capital, but it's not bad. And that's assuming this expires worthless. Well, there's a good chance that can happen if Microsoft only goes up. But this position doesn't just go to zero if Microsoft goes up, and we continue to be able to sell puts against it that can make some money, even puts that are outside of the money. We don't necessarily have to be very risky. We can give it room to move. So I didn't need to sell the 140, or I didn't need to sell the 500 strike. But if our goal is $100, what I ended up opting for was this ratio spread where we bought this one for 200 and then we sold this one for about 300. So that gets us $100 credit. If Microsoft goes up, we have the potential to make $250 before it breaches our short put here. So our long put would make money. We lose money on the short put potentially, but we gain another $250 here. And we got $100 to put this particular trade on. So all in all, it gives us a really good position if Microsoft does move down and if it moves down quickly. If it moves down slowly, we could potentially make some money on the spread. Even if it doesn't end up going all the way, we could close it out early. And we're going to make money on the long put compared to the short put. The delta on the short put, $21. For every dollar Microsoft drops, we're going to make $20 because the long was a $42 or was a 42 delta. So we definitely want Microsoft to go this way. But if it goes the other way, we get the $100 credit from here. And then next week, we put in something similar. Our goal, try to make $100. So we may end up selling multiple spreads to get to that $100, especially if Microsoft goes up, we might have to. But it's all about management of the position. We're going to look to earn income on this during that time period. We're going to take the profits. If we get a significant down move and it moves and it puts us in a position to get a good profit right away, I don't mind that at all. The fallback plan is earn income each week, and we can do that. So Microsoft, that was an exciting position that we opened. mstr, oof. We are in some long positions that went down because we clearly guessed wrong on the timing to get into those. But it's okay. We have 4 months for mstr to turn back around. And in the meantime, we're going to keep selling. Our theta, $30 a day on the positions that we're in right now. We did open up a new long, fairly close to the money. It cost us quite a bit more. In fact, we're out almost the same amount as what we put out for 2 of these. We liked being in that position at that time because our delta put us in a better position than had we bought this one at that time. Right now, our delta is slightly better on the one long call than both of these, but it's still pretty good. So if mstr starts to go up, we recover $64 for every dollar mstr goes up. But we don't have a whole lot of movement on this position that we're going to be profitable. It does expire in 5 days, but we gave ourselves $5 of cushion above that. We can make probably somewhere around $500 or $600 or $700 on this particular spread and get out of it if mstr shoots up to 325. If it goes up past that, we can always just roll this and continue to sell it each week, taking advantage of the extrinsic value that's decaying. The extrinsic value on this option, $410. That goes to zero in 5 days if mstr stays below 325. It also goes to zero in 5 days, no matter where mstr ends up. And we should be able to roll it out and make some additional money. What you have to watch out for in this position is if mstr goes up very quickly, the delta on this is quickly going to increase, and you're going to lose money faster on the short than you're going to gain on the long. That's a position I don't want to get into. So what we do, if it ends up breaching this 325 or gets right to it, we roll it out immediately and roll it up. You try and roll it out and up. What that looks like, you buy this back, you go to the next week. That one was a 325. We would go up to the 330 if we could and sell it and see if we can get a credit. The deeper in the money that option goes, the less credit that you're going to get, to a point where you might need to wait for it to almost expire to get any credit. That's when it's deep in the money. And you run the risk of that call being exercised before you get the chance to roll it. So it's not a great position to be deep in the money and have very little extrinsic value. Now, if we were to roll this right now, we would get a $220 credit, and the extrinsic value drops to $220, and the theta burn drops to $2. We don't want that. So we're waiting. It's also outside the money. So it's in our best interest to wait. Right now, our theta is $60 a day. That is a huge help for the positions that we're in. So be sure to manage your extrinsic value and your theta and your delta. You want to optimize for these positions and ensure that you're going to be making money no matter which way the stock is moving. We have a short call spread here as well, up at 350. This one, we can afford to lose money on this because we're going to gain money on these 2 long calls if it shoots up to 350. With these long calls, we make $44 a day. We have some short calls sold against it for 12 days out, mostly so we can capture this theta. It's not likely that mstr is going to get to 440 over the next 2 weeks, although you never know with this particular one. However, if it does, we lose max $500 on this minus what we got paid for it, which was $22. So we lose a max of $478. And if it gets all the way up to this, these are going to be worth a lot of money. So between these two, since we're kind of connecting these two as the singular trade, these are where we're getting theta that's going to offset what we're losing in theta here. We're losing $30 a day in theta on these longs. So we need to make sure we recoup that with the shorts that we're selling. Our overall net is $4 a day with these 2 positions. That works. That ends up working. But it doesn't work if we don't sell this one. We would be in the negative on this overall position. But our delta between the two is still over 38 bucks. So we're still going to make $38 for every dollar mstr goes up. Now, the quicker it goes up, the the difference in the delta for these goes against us. So we're always looking to manage that as well. But this isn't a situation where like I have to watch it like a hawk and manage it every second of the day. I look at these often throughout the day, but I don't do it in a way that's like panic mode. I'm not hopping in and watching it like a hawk because I'm so concerned about losing money off any move that's going to happen in any single day. If I was, I would just set a sell order. That's what we did last week with one of our positions on Tesla that was like this. So if I was concerned about this position, right now we can see our cost was $39.55. Right now the net liquidity is $36.87. So we're down. But if mstr moves up quickly, and it can, let's say it moves up $20, that takes it up to $3.30. This would be a losing position here on this one, but this one gains. Well, if our delta is $25 for every dollar of movement, you add $20 to that, we're up $500. We probably wouldn't be up $500 if it moved that quickly right away though, because the delta of this one is going to change. You have to look at the gamma to see how quickly this one would change. But essentially, let's assume that instead of it being 500, if the delta changes on this, maybe we make $400 or 300. If we make 300 on that move, I want to get out of it before we start to lose money on it. We're not necessarily going to lose. I want to be able to roll it if I can, but that would require me checking in. But if I didn't think I was going to be able to check in, we're going to just set up a sell order in the meantime. So we're going to say close, and I want my profit to be $300. Well, no, it was 300 above where it was at right then. Because if the price is going to change, so essentially, let's just say we make $50 in profit. Let's change this. What is it? 40, or at 4,000. If I sell this at 4,000, it's the equivalent of 40 here. That gets us a profit of $50, $45. Okay, worst case scenario, let's just get out of that. I'm going to say good till close, and I'm going to put that order in. That's if I was worried about it. There is times where you might want to worry about that, especially if it moves very quickly and it gets close to your short strike well before expiration, because that time value hasn't had a chance to deplete. All right, moving on to the next one. Let's look at NVIDIA. NVIDIA, we still have an iron condor out. We rolled up this short strike a couple of weeks ago, but all in all, we're at minus 67 on this. We need that time value to bleed out a bit more. If we go to our year to date on NVIDIA, we're up $298. So we could close this out. We made enough money when we completed the wheel to cover our position on this iron condor. I've just been holding out, hoping that we can actually exit for a profit and keep those dollars, because our position is getting about $3 a day. There's a really good chance NVIDIA is going to shoot up above 190 though, before 26 days is up. So I'm a little nervous on this. We have some ways to adjust this, but they're challenging. It's not the easiest thing to do. We just don't have very much money to make on the short side of this anymore. You can see the spread on the short side is $117. So this one has $117 that it can go down, while this has $100 that it can go down. But it's because of the roll that we're in a potentially losing position. We took a credit when we rolled it up, took a credit of like 40 some odd bucks. So the reality is our iron condor is actually only down like $20 from the original opening position that we set up. All in all, we're just going to be in a holding pattern here for a little bit. The most we can lose is $500. What we have to gain, if it stays between these two strikes, is $217. So still in a pretty good position, make a decent return on that. Hopefully we don't lose some money, but it's not the end of the world. We'll make it up somewhere else if we need to. Now, triple Q. We're starting something new with the triple Q. I entered a $1 wide strike. We sold the put credit spread here, and we got $26 for it. It expires in 5 days. Now, when I set this up, it expires in a week. That was what we were looking for. We want to go 1 week. If triple Q goes down, our max loss is that $74. But then we enter the wheel. Now, we're not necessarily going to enter the wheel this time, though. We're going to do something a little bit different. We're going to kind of let this build. If we end up losing this position, we're going to enter 2 more that following week on that same expiration that expire in a week. And we're going to get enough credit to pay for whatever we lost on this one and make an additional credit. Now it doubles our risk. It might triple our risk because we might need to do a couple of them to put us in the right position. Essentially, what I'm going to look to do in the future is sell these and get close to $40. That way I can just double it and we're making a profit the next week, more than what we lost the week before. So if we lose it, we're going to double it and we're going to enter and we're going to be in near the money, but outside the money of wherever triple Q is at that point. And then the next week, we're going to do it again. Now, we're not going to do that in perpetuity because it gets too risky or it could require too much capital. Basically, if we were to double this every day, it adds up very quickly after 7 days. Well, there isn't too many times that triple Q goes down 7 weeks in a row, but it has happened before. We can't afford to double it 7 weeks in a row just to kind of make back our money. So the plan is double it for a few weeks, and then we enter the wheel strategy where we take on a long position and we re-enter our short position just like this. And so with that long position, we can allow it time to recover without us having to keep doubling what we're putting in. And the risk that we put in on the long position is probably going to be the equivalent of whatever we would have spent had we doubled it again that 3rd or 4th or 5th week, whenever we decide to do it. So this is going to be an interesting strategy. I ran some back testing on SPX that was really positive with that type of a strategy. Same thing with SPY. Triple Q was less positive, but triple Q just gets us more premium. And you can't really back test the entire strategy that I was just talking about. I can only back test what happens if I put on this trade every single week and we just let it expire or we pull our profits at a certain time. It doesn't account for instituting the wheel strategy or doubling what I'm putting in. I don't have the ability to do that type of back testing. So when we add that into the results we got from the back test, we should be in a really good position with that type of a trade. So I'm excited to see where that one goes as well. And our final position, Tesla. We've got an iron condor expiring 5 days, another iron condor in 5 days, another iron condor in 5 days. And then we have our calendar spread and then another iron condor and a vertical. Now, let's walk through these. The most money we have at risk is this calendar spread expiring 263 days. This is our modified wheel. We have a long call and we're selling calls against it. And we can sell this call at 580 for 12 days. And we got $34 for that. That's wild. But it gets us $10 in time value that we're using to offset the 17 that we're losing on this one. Our overall position on Tesla, we're getting $26. So here's how this came about. We can't just sell this one. I want to get time value from shorter dated calls. Well, when I sell a call spread, that requires a certain amount of capital. In this case, $500 in capital. Well, for me to be able to sell a put requires the exact same capital. It doesn't take any additional capital because only one of these can be in the money at expiration. So I'm essentially doubling what I collect for premium when I do an iron condor. But I am at risk on both directions. So this is not a directional play. This is hoping that Tesla will end up somewhere between these two and that we can profit off of it. My overall credit, $76 on this iron condor expiring in 5 days, and our risk is $500. Well, you can see we have quite a bit of distance between these. Tesla's currently at $440. It's got to go up $40 to get to this one and down $60 to get to this one. This is a pretty good risk. And if Tesla goes down, we can re-enter the modified wheel strategy. We're totally fine doing that. Same thing with this one. Now, and this one gets us less room on the upside. This, however, is the original one that I was putting on to tie with the long call. However, it only gave me $5 in time value. That $5 did not offset my $17 here. So that's why we added this in here. But look at the delta. When I add this in here, it's almost no delta. There's very little effect because the odds of Tesla in 12 days hitting 580, very, very low. So this gets us some time value, and this gets us some time value, another $5. Between those two, we're still not offsetting that enough. So when we add in a short position down here, a short spread on the put side, we're utilizing the exact same amount of capital, but we're adding another $5 in time value. Well, that position was totally fine if we only put on that and these two, but I felt like taking a little more risk. So we put on some laddered call spreads well above where we expect Tesla to move this next week. I think there's a good chance Tesla moves to 450. Tesla could even go a little higher than that. But does it get to 465? I don't think so. Probably not. Does it get to 455? Possibly. Does it get to 480? I don't think so. So all of these give us some more movement to the upside and more credits. You can see we got 137 for this iron condor and 115 for this one. This one's a little more aggressive on the downside and less aggressive than this one on the upside, but more aggressive than this one. How I end up getting out of these, I don't have to close these all at the same time. I can close each one individually. I can close spreads individually, and that's generally how you want to do it. You want to close a spread all at once, but I like where that gets us. And if Tesla goes up, this is actually a call debit spread. We paid money for this one. It's currently in the positive, but this gets us 263 days until expiration. 440 to 450 strike. We spent 386 on this. That's nearly half of the cost of that. But if Tesla is above 450 in 263 days, we more than doubled our money. That's a good return on that investment, even if I just have to sit and hold it. And look at the time value. We only lose 15 cents a day. Easy peasy. And if Tesla goes up, our delta spread is $1.66. So for every dollar Tesla goes up, this makes $1.66. If Tesla goes down, we only lose $1.66. So we're not losing much if it goes down, and we have a lot of time value on this. All in all, we like our position on Tesla here. We're getting $26 in time value, and we're getting $33 in delta for every dollar Tesla moves up. That's it. That catches you up with where we're at. I hope you found this helpful. It certainly took us a while to go through all of this. If you find any of these particular trades intriguing and you want me to dig more into it, let me know, because that's why we're doing this. We just want to provide more value to you. Appreciate you joining us for this, and I hope you find this helpful. Good luck to you out there in the market. We'll see you next time. The next 20 seconds determine your future. Subscribe, meet with me, or continue educating yourself with these videos right over here. I appreciate you. Now go maximize your cash flow.